Hello everybody. We are going to find out Amazon. We're going to talk about Amazon. We're going to find out the fair value of Amazon stock according to Warren Buffett and the book The Intelligent Investor, written by Warren Buffett mentor Benjamin Graham. And we're going to start right now. We're going to find the fair value as well as the price that we will be a buyer long-term hold for Amazon, and it will have a little cushion margin of safety according to the formula and all that good stuff. So let's get started right away. Yep. So I'm in Yahoo Finance. Currently the price of Amazon as of today is 3,311. That is very fine. Let's see, the first thing on our menu is the EPS TTM, earning per share trailing 12 months. How much Amazon made per share for the last 12 months. So we have that number right here, earning per share, and we got this number 34.20. So we're gonna take that number 34.20 and we're gonna put it in the Excel, see what we see. Back in the Excel we have this one, earning per share. We're gonna put the number 34.20. that's very fine, and we got the earning per share TTM. Amazon AMZN 34.2. Next item on our list is the PE 8.5. This is a constant. It stays the same unless I get like a super high number. Let's say I get Amazon $10,000 valuation. I would love to have that, but then I will only then use a conservative number and change the 8.5 to 7. But for our first original example, we're gonna take what the book gives us, and that's using 8.5, which basically means that Amazon stock will not grow, highly unlikely, but will not grow at all in the next 7 to 10 years. And that's why we are using 8.5. I didn't make the rules, Benjamin Graham did, so I just follow him. Next on our list, we need to find growth. We need to find the growth of Amazon stock in the next 5 years according to all the analysts. So we're gonna go back to Yahoo Finance to find. So back in Yahoo Finance, in order to find the growth for Amazon stock in the next 5 years, we're gonna search all the tabs. Charts, conversation, statistic, historic data, analysis. Gonna click analysis right here. Gonna scroll all the way down. Yeah. Then we got ourselves this one. We're looking at growth estimate. Looking at growth estimate and the next 5 years, one before the end. Next 5 years per annual, and we got ourselves a number of 36.35%. It's not a bad, that's pretty good number, to be honest. Look at the past 5 years, 100% growth in the last 5 years, and they're thinking that in the next 5 years they're gonna grow another 36.35% year over year. So we're gonna put that number in our Excel, 36.35. Okay, back in the Excel, I'm gonna put in here in growth 36.35. that's pretty good. And the growth times 2, again, that's a constant in the formula. And as I said before, if I get a crazy like $10,000 valuation, I'm gonna change the 2 into 1. So there will be no growth, and the growth will be times 1, meaning no growth at all. In here, the number is 2, meaning that I assume twice that growth in the next 5 years. Why? Because Benjamin Graham at the end of the day was very aggressive investor. And keep in mind, this was 70 years ago, so stocks were cheaper than they are in the year 2020. Something to think about. Stocks always go up eventually in the 70 years plus. The answer is yes. Let's move on. The next thing on our list, we got ourselves a corporate bond. Corporate bond, meaning we divide all the formula by 4.4, which is the average corporate bond in the year 1962, if I'm not mistaken. Anywhere around that age, or anywhere around that time when the book came out to the market. So we divide our formula by 4.4, but we do need to find the Amazon corporate bond. AAA bond yield for Amazon. What does that mean? Well, as an investor, I don't know if you guys know, you have two options. You can buy the stock, whatever stock that you choose, or you can buy the bonds of said stock and avoid the downside, meaning that you don't risk yourself for the Amazon stock to go down, and all you do is guaranteed a coupon, interest, whatever the case is, 3%, 4% a year, something like that. Super safe approach, but I'm not a bond expert, so I'm not gonna play the bond game. I'm gonna play the Amazon game. Depends on the fair value and the price that we will be a buyer. But I do need to find the corporate bond of Amazon, so I'm gonna go to Google and I'm just gonna search Amazon bond yield. So I just googled basically Amazon bond yield. You can see right here I got a few options. I'm looking for the highest number. The highest the number, the more conservative valuation I will get, and I would like to stay conservative in order for me to invest in Amazon long term. So the first one I got here is 3.15. I'm gonna make like a note in my head. Next one is 0.4. That means that Amazon is super stable company. Look at this, Amazon raised $10 billion in bond for 0.4. That's like free money that they got, $10 billion free. That's crazy good. And this one is pretty pretty high, 5.2. I'm gonna probably use this one. This one is 3.3, and this one doesn't have any, so I'm gonna use this one, 5.2. Amazon for the year 25, for 5 years from now. The Amazon bond has a maturity date of December 3rd, 2025. Offer a coupon of 5.2%. The payment of the coupon will take place. Okay, so I'm putting 5.2 in the, so back in the Excel, and once I put the number here on AAA bond yield 5.2, and I'm gonna click enter. And before I do, guys, let me talk a little bit about, before I put the corporate bond number and get the fair value, let's take a look quickly on the graph of Amazon. Next earning, first of all, I see in February 2021, no need to worry. This is the daily chart. I like to use the daily chart. This is the value, more buy, sell. There was a big buy in here, which was around February at the around price of 2000. It's pretty awesome. Nothing major here in the balance of power. You see nothing big, just an average slowly climb up, and we are as of today around here below the 50-day moving average, but it does need to break the 50-day moving average in order to go to the double top that we have at the level of around, let's see where we are. It needs to break 3,430, let's say 3,400, and once it does, hopefully it will reach the moon if you have Amazon. If not, then let's find out if the price is the price that you will buy. If you guys don't know who I am, my name is Ziv, also known as Finance After 40. While I am new to YouTube, I have about 15,000 community members on TikTok, as well as Patreon page where we sell options for income. Just 2 days ago, we sold some put spreads on Tesla, collected $180 as passive income. Feel free to check the link in the description below. Let's go and find out the fair value of Amazon. Let's do it. In the Excel, let's put the number 5.2 in the AAA bond yield and find Amazon fair value price. And after that, we will find the price that we will consider buying Amazon long term. Let's go with the option number 1, 5.2. Click enter, and we got ourselves a number 2,350. That's $1,000 below of Amazon price today, 3,300. Now Amazon was at 2,350 a couple of months ago. We didn't buy. I should have done this video a couple of months ago. I did not have a YouTube channel, but I'm not done yet. I need to find out the price that I will be even consider buying Amazon long term if I don't have Amazon yet. And if you do have Amazon and you bought below 2,350, good for you. Very happy. You probably made good money. Now, does it mean that Amazon will go down $1,000? Nobody knows the future. Most likely not. Again, just my opinion. We are entering holiday season. November, December, January, pretty crazy good months for Amazon as a whole. I think Amazon will go to 4,000 plus, but that's just me, not a financial advice. Let's see the price that we are willing to buy Amazon. So I'm taking the fair price, which is $2,349 times 80, and I'm making myself a 33% discount. Warren Buffett would like to get 33% discount margin of safety on his long-term holds. So I'm gonna multiply the number 2349.8 in 0.67 and multiply it by 67%. It will give me a 33% discount, and the number that I get is 1,574. I'm gonna put that in here, 1,574. That's basically about 50% discount from here. That means that according to the fair value today, Amazon is overvalued. Well, tech is overvalued in general, tech stocks. Doesn't mean they're not gonna keep going up, but that's just mean that according to all rationale and reason, Amazon is overvalued stock. With that being said, guys, leave a comment below. Which stocks would you like me to do next? In my pipeline, I have Tesla, I have Apple, I have Google, and all sorts of good stuff. Write down your comments, and also don't forget to subscribe to see more of those videos. And if I bring you any value, guys, thank you very much.